Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, your host. Today's topic is funding college education, and especially a loan program called NYHELPS. My guests are James Ross, he's president of HESC, that's Higher Education Services Corporation, and Mark Sullivan, president of the College of St. Rose. I want to welcome you both to the show.
Thank you.
Thank you. It's wonderful to be here.
The climate today is certainly a little gloomy, and a little good news is a good thing. Let's start out, Jim, with what is HESC?
HESC is a state agency, and we help people pay for college. That's our singular mission. And we do that through the landmark tuition assistance program, which provides students grants, annual grants up to $5,000. And the total expenditure for the state each year for the tuition assistance program is over $800 million.
Wow.
It's the most generous grant program in the nation. And we also administer 25 scholarship programs that assist students also to supplement their TAP awards to help meet their college expenses. That's our role on the state side. On the federal side, we administer the federal guaranteed student loan program.
Okay.
And that totals this past year over $300 million, over $3 billion.
Oh, okay. So we're almost up to four here.
In loans,
Mm-hmm.
Right. So the students in New York, fortunately, have many opportunities to meet their college expenses. And I'll come back to that later on.
Okay, let's introduce Mark. Mark is president of College of St. Rose. How are things at St. Rose, and how does this fit in?
Well, things are good. We're all concerned about the impact of the recession on affordability to our college, as all college presidents are thinking about that these days. And this program that the governor has proposed and that Jim will describe in detail really comes at a good time. Our students are worried about how they're going to finance their education. We do it in a variety of ways. We assist them in a variety of ways. We ourselves provide $22 million in tuition assistance out of our own budget. And then, of course, virtually all of our students will apply for other state and federal aid, be they the tuition assistance program grants or federal Pell grants or Stafford loans at the federal level. And even with all that, many of our students find that they have to go out and borrow money through alternative private loans. And the fact that so many banks are getting out of that business, or the rates that the banks are charging for those loans are so high, it really creates a problem for our students. So this program, with the interest rates that are going to be built into it and the accessibility of that loan capital, will help many of our students finance their education.
I wouldn't have gotten through college myself without some help, and so I certainly appreciate as well as understand what you're saying.
Mm-hmm.
Jim, could you talk about this particular, what were you going to say?
I'd be delighted to. Let me define the problem. Students receive, here's college costs. Students receive federal aid, and on top of that, as I described, they receive state aid through grants and loans. But with costs here, there's still that gap. And as Mark said, students have to fill that gap by going to banks. Unfortunately, the lending institutions have moved out of the student loan program. And those that have remained are charging interest rates 14, 16%, annual cost.
That's almost as much as a credit card. That's bad.
It's real bad.
Especially
news.
if you look at the time period over which they're repaying it. Right?
10-year time payment.
Yeah.
So the banks have moved out of most of them have moved out of the student loan business, and those who remained are charging these high interest rates. And the third factor is students with FICO scores, low FICO scores.
And that's the credit score.
That's the credit score.
Okay.
Everyone has a FICO score. I didn't know the term until I was 50, but everyone talks about FICO scores nowadays. Last year, students with FICO scores at the maximum FICO score is 800. But students with FICO scores as low as 640 were getting loans last year. Now, banks are saying to those students, your FICO score has to be above 700.
Oh, wow.
So there's a big population that is denied loans.
And is that based on their parents as well? Because a lot of students haven't
is.
had a chance to build up any score.
Right. It's based upon, in most cases, their parents' FICO score. And of course, these three problems, banks moving out, high interest rates, and low FICO scores, have really put pressure on some of the institutions, and particularly families. So, working with Governor Patterson, we designed New York Helps. What it does is this program provides $50 million in this first year as a backstop to defaulted loans. So we can now say to banks, if you have a student who defaults on a loan, New York State will purchase that loan. They'll give it to HESC, and we will work with students to get them back into repayment. But once banks realize that they will not be stuck with bad loans, that the state will purchase those loans, there is no risk. With no risk, banks will come back into the student loan business, and they'll lower interest rates because there's no risk.
Of course.
The interest rates on these New York Help loans will be between 7 and 8%. And FICO scores, students with FICO scores now who have to be above 710, 720, students with FICO scores back down to 640 will be able to get loans from banks.
Okay.
It's the $50 million in providing that assurance to banks will generate between $700 and $800 million a year in loans.
I see. So that 50 really leverages.
It leverages between $700 and $800 million annually in loans.
Great.
So it's a program for its time.
Okay.
And Mark's excited about it, and his students will certainly benefit.
Let's go into some of the details about that program. You mentioned the interest rate.
Yes.
A few other things.
Well, one other thing is it will generate approximately 45,000 loans annually. New York State is the only state in the Northeast that doesn't have a state student loan program. And with the rich array of financial aid that we have, as I discussed earlier, for New York State not to have a state student loan program is an anomaly because we are so generous with our aid. Governor Patterson putting this forth will provide a loan program from New York State, and he is fully supportive of this program. Matter of fact, the HELPS program is the one of very few pieces of good news in this budget. But it shows the governor's commitment to higher education, and we're pleased with that.
Okay, good. Before we go into the bill itself, a few more details. Payback, how does that work?
The loan can be, loans will have a maximum of $10,000 a year for up to 5 years of undergraduate study. And the loans will also cover 2 years of graduate study at $10,000 each. So a student conceivably could have 7 years of loans through the HELPS for a total portfolio of $70,000.
Now, in terms of the payback options, are they similar to payback options for other student loans?
Yes, we modeled those payback options, many of the payback options, on the federal student loan program, because financial aid officers are familiar with that, and they will be counseling students on these loans. There's a very important caveat. Before a student can qualify for a New York HELPS loan, the financial aid office has to certify that that student has used all of their federal and state student financial aid.
And would that be the school's job to certify that?
Yes.
Okay.
The financial aid officer will certify for each student that applies for a HELPS loan that they have used all of their federal and state loan programs, with the exception of the Federal Plus program. This loan can, and at times, substitute for a Federal Plus program, which would cover all the remaining costs. This substitutes because there are families that don't qualify, or students that don't qualify for PLUS loans. Graduate students do not qualify for PLUS loans. Independent students do not, students who are not living at home do not qualify for PLUS loans. And some families do not meet the credit criteria for a PLUS loan.
So there's a means test for those. Is there not a means test for this one in terms of the parents?
There is not a means test other than the FICO score.
Okay.
But the other test is you must use all of your financial aid resources before you come to the table for the New York HELPS.
That sounds like a protection.
Well, I think the point behind that is that, first of all, applying for financial aid today is a very confusing process. When the new Secretary of Education in the Obama administration, Arne Duncan, came in, he said, this is the most complex process that he has ever encountered. And that's because of the labyrinth of federal and state grant and loan programs. And this aspect of the New York HELPS program, which requires some financial literacy and requires some counseling to go on, will not only help students qualify for this program, but it will sort out some of the mystery that is associated with applying for financial aid. The one thing that none of us wants to encourage are students to incur more debt than they have to incur. And that's why the feature where you have to exhaust your eligibility for the other programs first before you apply for the New York HELP programs makes a lot of sense. We don't want to see students walking out of St. Rose with loan debt, aggregated loan debt that is going to be so high that it'll be impossible for them to pay it off. So that's an important aspect of this program.
Makes sense. I know there's a financial literacy component to the program as well.
And Mark triggered that important word. Each student, before they qualify for this loan, must pass a financial literacy module each year. And that module will vary. And they'll take the financial literacy module, electronic, on the web, and they will be required to pass an exam after they work through that module. And each year, there will be a new financial aid module. We'll have probably 8 to 10 different modules for students to select from or be provided to students, because their financial literacy at first is basic loans, basic borrowing. As they progress through college, there are other modules that will address credit card debt, mortgage debt, auto debt, and then each year there will be different modules for the student to take and to pass, so that their ability to manage their finances are greatly improved, and their ability to meet their requirements in paying their loan debt is improved also. So the financial modules that we will provide electronically to students will be a model for the rest of the country. I expect this to be a key element of this program.
That's great. We've had a few people on this show, and they've talked about the financial literacy problems in the country, and many people who are interested in that point out that they really need to reach many segments of the population, including teens and college students, because college students are receiving offers for credit cards,
Right.
and maybe not as many
Not as
today,
much
but
today, right.
but
Right.
still they're tempted into these 20% loans.
Right.
What kind of financial counseling does the college provide?
Well, we sit down with every student that applies for financial aid, even outside of the realm of the New York HELP programs. And our aid officers start out when students are interested in applying to the college, and we provide materials and communications to help them get up to snuff in terms of what it means to apply for aid. And then we walk them through the process from the point of their interest in the college right up to their point of enrollment and then post-enrollment. And it's probably at least half of what our aid officers do is counsel our students in where they're eligible for a grant program and how they need to, what process they need to follow for the various loan programs. So it's a major requirement, and it really does consume a lot of our time. But it's important.
It may help in the payback in the long run as well.
Well, it certainly will. I mean,
I've read some fairly impressive figures of the low percentage of
defaulted loans. Yeah,
defaulted loans, or high percentage of defaulted loans, yeah.
Right, and in our case, the default rate is under 2%.
You're kidding.
And I think
That's
that's
fantastic.
a testament to the hard work of our aid officers, but also the fact that our students and their families are willing to take on an obligation to pay for their college education and meet the requirements to pay the loan back.
That's fantastic.
And that's important.
And Mark mentioned he starts working with students when they're in high school on counseling.
Well, one of the things I just thought of is that we're in the process of enrolling our next class, and we developed a new brochure this year with an aid calculator. So you can essentially structure what your financial aid package might be at the point that you're initially interested in the college. And you put that on the website, and everything is web-based today, so you have to be able to communicate your net cost, not your sticker price, because very few people pay the sticker price.
Right.
And we've been able to demonstrate to prospective students that our net cost after the average aid package that our students are going to receive is about $12,000 a year, which is comparable to what the net price might be at the State University of New York. And that levels the playing field. Of course, a good chunk of that aid that we're providing is through our own resources, but nonetheless, it eases the anxiety on the part of prospective students that they can afford private higher education if they follow step 1 through 5.
That sounds good. I mean, I would imagine that the anxiety would be, am I doing the right thing? And then how am I going to follow through once I do it? Of course, most teenagers and college students are thinking about today a lot more intensely than 10 or 15 years away, but
Right.
That sounds like a really successful program.
Well, we'll see. We started it this year, and there's a high degree of interest in it. We have 600 students and family members coming to the campus on Sunday for our annual scholarship brunch, and a lot of questions will revolve around financial aid. Hope we've done our homework to inform them of what's going to happen and make them aware of this opportunity, which will be an even better solution to their loan problems.
Especially when some of our portfolios, the 401ks and money that we've saved maybe for children's colleges has inexplicably gotten smaller.
Right.
Well, the 401ks have become 201ks.
Just about.
But the benefit of what Mark is doing to the high school junior, even the high school sophomore, it says to that student through these programs, college is available for you. You can go to college. You can afford college with the combination of your family resources and the institutional aid and other aid that's available. So these financial aid components that we'll have on our website will be available for all students, even those students who don't take out loans. And we hope to have this website available to community-based organizations where students in high school can go for counseling and advice. The more informed the student becomes, the better off that student will be in achieving their dream of college. The other aspect of this New York HELPS program is it is a program for limited to New York State residents attending college in New York State. So if you're not a New York State resident but attending college in New York State, you'll not qualify for this loan. If you're a New York State resident who chooses to go to another college outside of New York, this will not be available.
Great. Because New York has recognized it has somewhat of a problem. We lose students when they graduate. If we don't have enough jobs for them, then they're going to leave. But we need to produce them, so the jobs will come here.
Right.
And that's one of our draws as well.
Right.
Yeah.
Let's talk about the bill just a little bit. It's not passed yet. It's in the governor's budget.
It's part of the governor's budget, so it's not a separate bill, standalone bill. It's part of the budget with the accompanying $50 million. Schools will pay into this pool, the backstop pool, I call it, which would buy defaulted loans. Colleges that participate in this program will pay 1% of the total volume that students receive each year into this pool. This pool becomes very essential in providing that assurance to lenders that their loans will be picked up by New York State if the student does default. So that's just a critical part. Now, since the beginning of the legislative session, I've had visits with, I've called upon over 40 legislators to date. And the reception has been very strong, very positive. Because, as I said earlier, it's the one piece of good news in a very, very difficult budget year.
And do they recognize that leverage aspect? Is that part of the attractiveness of it?
It certainly is. When $50 million can generate $700 to $800 million in loans, they go, my Lord.
If I could do something like that, I would jump at it.
You jump at it, right?
Yeah.
So that's, the reception is good.
Does the bill need any support from the public?
It needs all the support it can get. And I urge the public to go to the HESC website, HESC.org/New York Helps, NYHELPS.
We'll put that on the screen.
That'd be wonderful, because if students go to that website, they can learn all about the HELPS program in great detail. And that would encourage them also to contact their legislators and urge consideration and passage of this important program.
So it looks like we have two messages today. One is to support this bill.
Right.
And the other one is, how would you put that, maybe as a final comment from both of you, talking to parents and children about their financial aid package and how they're going to support college. How should they approach this whole thing?
Well, I think they should certainly support it and contact their legislators and encourage them to support the governor's proposal because of all the attributes of it. And I just think that from a public policy perspective, you hit the nail on the head. Many of us and many of the leaders in the legislature have been bemoaning the fact that there's a brain drain of occurring in New York, and many of our graduates are moving out. And just as we have to focus on legislation and stimulus action to rebuild our infrastructure, we have to rebuild and sustain our human infrastructure too, and have those qualified, educated young citizens of New York coming out of our colleges after this recession leaves us, whenever that might be, so they'll be empowered to build a better New York. And I think that's very important. So I think it's one of those unusual forms of a public policy initiative that is a win-win for everyone. It's a win-win for the students, for their families, for the case of affordability of college education, for sustaining our human capital in New York, and it comes at a very, very reasonable price, as Jim described it. And I think it's the one bright light that we can look toward this session.
And let me add, Mark, you're 100% right with that comment. Let me add, this is the first student aid initiative in New York State in 35 years. The first new student aid initiative in 35 years. We have to go back to 1974 with the creation of the TAP program, the Tuition Assistance Program, in 74 to reach the previous student aid initiative.
So with that in mind, I guess we can wrap up. I think you've covered that bill pretty well, and we urge parents to go to your website, we'll put it up again, to think about financial aspects of their college education, and the payback is many percentage excuse me, above what they pay out. So there's another leverage. Once you get that college degree, you generally make a lot more money.
Exactly.
Thank you so much for joining us.
Thank you very much. Enjoyed
Thank you
the
very much. Thank you.
Thank you.
opportunity to be with you.
And I want to thank you for watching. I hope you enjoyed the show and that you tune in again next time. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.